So perhaps now is a good time to talk gold with Peter McGuire. He's joining us from XM. Peter, welcome. Gold hammered, along with a lot of the other in the metals complex on Friday in the wake of that very strong jobs read. It was very much a risk-off environment. What are you watching this morning?
Well, good morning, Nadine. Yes, it certainly was hammered, and it's given up a lot of that hot air that really pushed it, $100 further than what it is at the moment. US dollars come under some strong move to the upside. It's running at around about 103.10, the US dollar index, and it's bashed a lot of the other cross rates. And I think that US payroll really was a surprise act. 185 was consensus. That's where all the analysts were, and they were out only by 200%, came in at 517,000. So that's why it's so hard to tip that one. And probably best to sit on the sidelines and just see it drop and what impact it has to the market.
Okay. Well, where are you looking in the market for opportunity now, Pete, when you're thinking through the trading lens, of course?
Yeah. Well, I think, Nadine, that US dollar needs to be considered, and you've seen that. You saw, as you mentioned, the big washout as far as gold and the impact it has to all the other cross rates. You've seen also energy prices really give up a lot of their steam over the last week as well. You've got Brent just on $80 a barrel, and you were nearly at 90 only a couple of weeks back. So a lot of that has evaporated out of the market. It's a consolidation time really in that channel just to get a clear indication where we move from here. Jay Powell's rhetoric, conscious as far as inflation and the ongoing job saga and how many more rate rises for the US dollar over the next, say, 3 to 4 months.
Got it. Now, let's talk crypto, shall we? Because, I mean, the best January for crypto since 2013. Now, of course, the history of Bitcoin doesn't go much further than that. So what's happening here?
Well, it was hammered, as we'd all know, really just sold off. And like everything, I think, with markets, Nadine, they're oversold or overbought. And that was a classic. It was oversold by the looks of it, where it's ended up, and it really pushed, really underwater, and it's bounced strongly. I've had a look in the last couple of hours. I think it was about 23,400, so I'm not sure if it's changed. And it's, by the looks of it, further upside. So, again, don't get in the way of a bull market. If something's moving very aggressively, then jump on the tailwind of it and ride the magic carpet.
Yeah, well, it's always fascinating to watch. So we've got a couple of charts on screen. So if we see the price break above its recent high, you think, we could continue to see further advances? Do you think that we could hit, the peaks that we've seen with Bitcoin?
Yeah, I won't be surprised if it takes it out eventually, Nadine. I can't put a time frame on it, but there's a lot going down geopolitically, globally, all this year. So how the US dollar plays into all of that, alternative payment system for the likes of OPEC producers and certainly, the BRIC nations. So how that all rolls is going to be a fascinating time, and where Bitcoin raises its head during that process will be quite surprising, I think, for many.
And your traders have to keep in mind geopolitics as well. I mean, quite extraordinary scenes of that Chinese balloon being shot down off the east coast of the United States. I mean, there's plenty of opportunity for volatility around that narrative as well.
Absolutely. Yeah, there's the first part of it, certainly the balloon saga. Secondly, the Taiwan issue. We had, only a shot last week with the Israeli drone that was speculated into Iran. And then you've got the ongoing Ukraine-Russia situation. So there's no shortage of hotspots. And how all that plays this week is going to be, I think, an indicator where energy plays over the rest of the month, Nadine.
All right. Well, look, we'll be watching with much interest along with you, Peter McGuire, XM. Thank you so much for joining us today.
Thank you, Nadine.